Due to the decentralized nature of blockchain and cryptocurrencies, everyone has access to the information stored on the blockchain of Bitcoin, Ethereum, and other public blockchains. That allows everyone to perform what we call an on-chain analysis, which is basically studying and understanding what is happening on the chain. Some examples of the type of information we can get from an on-chain analysis are to see whether people is selling their coins in a profit or a loss, the miner's revenue, the number of daily active addresses, transactions and volume, whether the miners are accumulating their Bitcoin or actually selling it, whether people is sending their cryptocurrencies from the exchanges to cold wallets. And that's just the beginning. We can see much more. Now, by only saying that, I'm pretty sure you're already thinking how powerful that is, right? Well, I think that too. And if you're thinking that all of this could somehow be used to see if the bear market bottom is closed or not, well, yes, you're right. An on-chain analysis can most definitely allow us to study the metrics that could be related with the Bitcoin cycles. Welcome to Crypto. My name is Xavi, and in this video I will be showing you some on-chain metrics that will give you a clear view about what miners, exchanges and investors are doing with their Bitcoin, as well as I will also be showing you some metrics to be able to understand the health and robustness of a blockchain. Let's dive straight into it. The first metric I want to talk about is the one that shows us the total hash rate of the Bitcoin network, as it is a key security metric. So basically, the more hashing power or computing power in the network, it means that the network is more secure and more resistant to an attack. We can see that the hash rate has been just upwards, except here in the 2021 dump when China basically banned mining. Then it really recovered very fast, reaching all-time highs again. And what does it mean? Why is it good that the hash rate just keeps increasing? Well, it's good because to carry out a 51% attack of the network, it's getting every time harder and harder because it will require more and more computing power. So now you may be wondering, if the hash rate has been basically increasing and increasing since the beginning of Bitcoin, why does it take us still 10 minutes to mine a Bitcoin block? That is because the Bitcoin algorithm adjusts the difficulty to solve a block every 2016 blocks, which is approximately 2 weeks. So basically, if a lot of miners start shutting down their mining rigs at the same time, the hash rate will decrease, which basically would mean that it would become much harder to solve a block, and then the algorithm every 2016 blocks, it will adjust for that. So basically it would keep taking us approximately 10 minutes to mine a block. So generally we would check this graph to see the health and robustness of the Bitcoin network. Now the next metric I want to show you, it's the spend output profit ratio, or SOPR, which basically shows us the ratio between the price sold and the price paid per Bitcoin. When this indicator is above 1, it means that the coins sold that day are being sold in average in profit. And the other way, when the indicator is below 1, it means that people are in average realizing losses that day. Or basically, in other words, when it's below 1, it means that people are selling their Bitcoin cheaper compared to the price they pay for them initially. The next metric I want to talk about is the distribution of the ownership of all Bitcoin. We can see here that 65% of the Bitcoin owners have held them for over a year, representing the holders, 25% between 1 to 12 months, representing the cruisers, and only 10% within a month or less, representing the traders. Now guys, I'm talking numbers here. It doesn't matter if you're a Bitcoin pro or a Bitcoin hater, the numbers are here, saying that 65% of the Bitcoin owners have been holding them for over a year, and it means that basically they are long term. So guys, there is only one question you should be asking yourself right now, and that question is, if 65% of the Bitcoin owners didn't sell last year when Bitcoin was almost at $70,000, do you really think they're gonna be selling at 20,000? Of course not. In fact, they are not, otherwise this number would change. But they are not selling. If they didn't sell at almost $70,000, they are not gonna sell now at 20,000. Why boot them? I think that's a very good indicator to see where the money in Bitcoin is right now, which is in the long-term run. Now I'm going to have a look at the Bitcoin exchange reserves in all exchanges, and we can see that overall the exchange reserves has been going down and down and down for the past 3 years. So basically what people has been doing for the past 3 years pretty much, except here in the first kind of all-time high, we could call it, from the last bull market over here, that of course, I mean, we're coming from a Corona dump of around $4,000. So of course, when the price reached around 64K, people started to sell their Bitcoin. But look at that, right immediately they continue basically buying the Bitcoin and sending it to cold wallets. Why would they do that? Well, because they would rather hold their Bitcoin in the long term in a cold wallet where it's much safer than in an exchange. In other words, this chart corroborates that people who's buying Bitcoin or who's been buying Bitcoin for the past almost 3 years, they've been buying it to be in the long term of the game, holding it in a cold wallet with a long-term mindset. The next on-chain metric I want to show you is the one called the Pull multiple. This metric looks at the supply sides of the Bitcoin's economy, which is the Bitcoin miners and their revenue. It explores the market cycles from a miner's revenue perspective. Bitcoin miners are sometimes referred to as compulsory sellers because of their need to cover fixed expenses such as mining hardware, electricity, and sometimes even security within a volatile market. The revenue they generate can therefore influence the price over time. The Pull multiple it is therefore calculated by dividing the daily coin issuance value by the moving average of the daily coin issuance value. Historically, the Bitcoin price has always bounced on the green area of the Pull multiple chart. We can see that the price bounced here, 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 and once again here. Now, we can see here that the Bitcoin price seems to be bouncing on this green zone where we bounced and marked the end of the bear market in the past years. Does this mean that the bear market is over just because the Bitcoin price is bouncing on here? Absolutely not. I would never suggest you to reach a conclusion from only looking at one metric on chain, but instead it is important that we look at the overall movement and momentum of all the metrics. Now, the next metric on chain I want to look at is the number of active addresses of Bitcoin, as we can see here from the very beginning of Bitcoin, which is been going upwards. We have, of course, these two peaks here in the all-time high from 2017 and the all-time high from last year, 2021. And that's just because a lot of people wanted to sell their Bitcoin at a very high price. And looking at the numbers, we can see that just last week we had around 4.4 million active addresses, which I would say also is somehow a good indicator of the health of the Bitcoin network. By the way, if you find interesting the content of this video, feel free to go down below and let me know with a like. Another interesting on-chain metric to look at is the number of transactions on the Bitcoin network. We can see here that we've been averaging around 250,000 transactions for the past 7 days. But also I would like to combine this metric with another one down below here, which is basically the transactions volume in US dollars. And as you can see here, we've been averaging around $80 billion in transactions per day for the last 7 days, being the 7-day high around 110 billion and the low around 40 billion. The last metric I want to have a look at is the average transaction fees on the Bitcoin network. We can see here that we've been averaging, around $1.5 for the past months, and actually it's been like that almost always, except in periods of a lot of volume here, like hitting all-time highs like here and here. But otherwise, a fee of around, let's say, $1.5 in average. That's absolutely nothing. I mean, we just talked about having around $80 billion in volume per day, having around $1.1 to $1.5 in fees. And I would say that this simple metric, at the end we are only seeing the average transactions fees on the Bitcoin network. But I really think that for someone who doesn't really understand the power of Bitcoin, that's one of the reasons why Bitcoin and generally cryptocurrencies and blockchain are very powerful, to allow people to do transactions with such low fees to all around the world. By the way, equally important to analyze the data, it is as important the quality of it. So make sure that when you perform an on-chain analysis, you use it using sources like Glassnode, Into the Block, blockchain.com, or looking into Bitcoin, among others. Wrapping it all together, we can see that the total hash rate is indicating us that the Bitcoin network is safe, robust, and healthy, which is a good long-term indicator for Bitcoin. Moreover, the distribution of the ownership of all Bitcoins show us that 65% of holders didn't sell for over a year, meaning that they didn't sell at the all-time high from last year at around $70,000, and they are not selling now. Or in other words, that 65% of the Bitcoin holders are here for the long term. On top of that, we've seen that the Bitcoin exchange reserves has been decreasing for the past years, meaning that people has been buying Bitcoin on the exchanges and after that sending them to cold wallets to store them safely for the long term. In fact, the chart also showed us that people are still doing that right now. Now, the Pull multiple, which we said that looks at the miners and their revenue, it seems to be bouncing around the same area where it bounced in the previous bear markets when they finished. Also, looking at the number and volume of the daily transactions of Bitcoin, together with an insignificant fee for them, without this being directly related to a potential bear market bottom, I think it's overall very bullish and very positive for Bitcoin. At the end, there are thousands and thousands of companies out there that basically they have businesses all around the world, which also means they are using tens of different currencies, paying fees in every currency exchange, not even talking about the massive accounting hassle that it involves having tens and tens of different currencies in the same company, for which at the end all these problems could be solved with only one currency, and not only being solved but actually improved. However, the reality is that we are still on a bear market and not all indicators are as positive as the ones I just mentioned. Like for example, the SOPR, the spend output profit ratio, is right now below 1, indicating that there are some people out there selling in average in losses, or in other words, selling their Bitcoin at a lower price than the one that they paid initially for it, which is of course a negative indication, because it means that there are some people out there that they rather lose money than hold their Bitcoin. But as we've seen in this video with numbers, that's just a small minority of the Bitcoin holders, and the main majority of the Bitcoin holders are actually here for the long term. Said that, I believe that we will be in a bear market for the upcoming months now. Perhaps we will even cover some months of 2023, or until we see an overall improvement of the macroeconomical situation, which I don't expect to happen at least until next year. But zooming out and looking at the numbers that this on-chain analysis has provided us with, I am long-term extremely positive and bullish for the future of Bitcoin, cryptocurrencies, and the overall blockchain industry. By the way, there are still some very useful on-chain metrics that I didn't cover on this video, so if you would like me to make another video going through them, you can let me know going down below. Thank you very much for today. I hope you learned something on this video, and if that's the case, I would really appreciate if you would go down below and press the like and subscribe button for more content like that. I'll see you in the next one.